of the things I think that all of us sometimes wonder about is why some stories take off and others don't, and there doesn't always seem to be rhyme or reason. And so I wanted to break that down a bit into the different stages of companies, exploration, development, and production, and sort of the pros and cons of each and the flavors of the day and how those all relate. So the first question, investors these days obviously, well, always, love discoveries. But for our industry, I think there's both benefit and cost to that. So true discovery stories, like we have quite a few here, are great for investors and for the sector, but the fact that those can return such incredible profits means that investors can fairly easily get lured into not real discoveries. I could mention certain companies, but I'll leave it to, visual descriptions of core that attract a bunch of excitement, send a share price through the roof, and then the numbers come back and they're no good. There's scenarios like that play out more often than we'd want, and people get very disappointed, lose a lot of money. So the question is, on the discovery end of the spectrum, how can investors navigate that minefield? What do you guys watch for specifically to navigate that minefield on the discovery end of the spectrum?
Core photos are absolutely a double-edged sword. It depends on what you're exploring for, right? I mean, if you're exploring for high-grade zinc or VMS, if you're in it. I mean, if you're drilling that stuff, if you hit 25% spell rate, it looks like 25% spell rate. It's pretty obvious. It's a lot more dangerous with things like gold projects because it's extremely easy for even geologists and experts to misinterpret visual mineralization in core. Personally, with the very rare, and they are extremely, extremely, extremely rare situations where you have large-scale, large particle gold, something like a Fruta del Norte or something like that. Outside of projects like that, it's really easy to vastly overestimate the grade. So I just don't care, like show me assays. I just try to make a habit of simply not getting excited about. I might look at something where it's like, wow, that's absolutely the right kind of epithermal vein and stuff, but it doesn't mean anything until I see assays. And the one thing you need to check for because I've seen a lot of this lately, is companies going back to projects that have a resource on them, and often for completely legitimate reasons. I mean, often because it's an old project where the core wasn't stored properly. It makes it very difficult to do 43-101 resource because the authors don't have access to that stuff. So quite often you find yourselves having to re-drill within the resource. And you got to be really careful. A lot of companies that do this, they're very upfront. They make sure everybody realizes when they put the results out, we're drilling this hot hole in the middle of an existing resource. But I've seen quite a few cases lately where guys put out big arm wavy intercepts, and you've got to get to page 4 of the release, or sometimes you've got to go to the site and look at where the hole is to go like, oh fuck, they drilled it right in the middle of the resource. Like, I mean, it's nice, great, nice hole, but it doesn't actually add anything to the value. And I've seen a lot of those lately. Like, you got to really be careful about that.
So Jay, do you wait for assays? Do you read to page 4 of the news release? What's your tactic?
Yeah, I think what Eric said about the deception that some companies maybe knowingly create. So I think it gets to the management. The integrity of the management is one thing that you can look at. I mean, that's aside from surely you don't want a single drill hole, no matter how good it is. It creates a lot of excitement, and maybe if you're an early investor, you might want to get ready to pull the trigger on some sales, depending on what comes out next. But I think I also like to look so much at the integrity of the management. I like to see companies that are that have a lot of strong hand ownership, that is, structures are very tight with good quality shareholders. I think a lot of times that's going to tell you something about the quality of the projects. And then, yeah, I think you just have to keep an eye on the drilling, and as it progresses, and start to figure out, the assays when it comes back, obviously the assays, and then start to visualize what in the structures and what might you know, what they have to shoot at going forward, and just sort of try to figure out what might be there and what the valuation might be. So single drill holes, yeah, and companies like to show those nice shiny cores on their websites a lot of times, and they are attractive. Bring them to conferences, but I don't think too many people at this conference fall for that kind of nonsense. So anyway.
Greg, are there other things that you watch for to catch the tricks?
Yeah, you know, first of all, it's just dealing with the right people. There's shysters in any business. You know, we've all dealt with it as newsletter writers. We've all seen it. It's unfortunate that there's those people out there. You know, you've been around. We've all been around long enough. We can kind of see them coming a lot of times, but sometimes they're so good they sneak past us, right? And you do have to check the results. You know, I'm not a big guy with grab samples or trend samples. I don't really care. I want to see those assays, and I want to see their assays in relationship to what the geological situation is, right? I remember a guy I love, Adam Travis, Colorado Resources. They had a big discovery years ago. We got in at 10 cents. It went to $1.80. A lot of us got greedy. We didn't sell as much as we should have, and it came right back down because what had happened was, as they were stepping out, you know, the market got quite excited because it was high-grade gold up in the Golden Triangle. This is back in like 2007, 8, 9, you know. And there was a fault that ran right through it, and the mineralization wasn't on the other side of the fault.
Yeah.
And suddenly the whole thing fell apart, right? So that's why I'm big on site visits, especially when there's an active program that's having success. I want to go out and see it. You know, I can't look at a map and tell certain things, but when you get out there, you can really start to understand the lay of the land.
I think to all that, I would add, wait for any company. Almost any time that there's a visual description of core, I take that as a red flag.
Yeah.
I mean, I think if you're a geologist and you're excited about your core, you should be just as, if not more, excited for the numbers. So just wait for the numbers, because that's real and the core has all kinds of risk related to it. And then when those numbers come out, what other information, how are you explaining that information? Do you at least have a plan map, so looking down, where are the drill holes? Ideally, do you also have some cross sections? The data may be early, so maybe there's not a lot to put in the cross-section, but you should at least try and have a cross-section that explains what the mineralization is, where it is relative to structure, or lithology, whatever it might be. And just how are you explaining the story? Because it needs to add up. 1 + 1 + 1 needs to add to 3, not, 6.7, right? So I think looking at the quality of the data, waiting till there's real data, and then looking at the quality of how it's presented can in itself cut out a lot of the junk.
Well, Eric, I know your brother and we were on a site visit one time, and we were drug out on this site visit. I won't mention the name, but, they're claiming new discovery. David and I get out there, and they twin the hole, right? They twinned an old hole, and we were so upset that they wasted all our time over this, trying to do the arm waving thing to get our attention, and of course immediately we just dropped it and said, screw these guys, they don't deserve any attention, right?
Yeah.
Yes, I think part of that is the network too, right? If you have a good network and you ask people about a project, if it's an old project that's had holes in it before, someone will crop up and say, oh, wait a sec, I remember that asset. And then you'll get the backstory that the company may be just sort of tucking away. Okay, so that's sort of the discovery side. If we move on a little bit, the market often gets bored with stories once they get past that discovery stage, and maybe an initial resource estimate. And sure, drilling out a deposit isn't as exciting. Permitting is straight boring. We all get that. But especially for copper and zinc, our whole bull thesis depends on there being a supply gap and there not being projects to fill the supply gap. So do you think that it's going to be different this time? Will advanced assets get any more love because of the takeout potential, because of this fundamental supply gap? Or is boring as boring does?
I'm hoping they do, since I own a bunch.
Yes.
Much like you, you and I have talked about this, the disconnect between the physical market and the market pricing in the base metals right now is bizarre.
ridiculous.
Like I don't know anyone that doesn't have long experience of the base metal market that isn't just shaking their head going, this makes no sense. Like, I don't understand why this is happening. And it's absolutely impacting the valuations. You know, it's like anything else. You've got to be very selective. I mean, whenever you're looking at things as potential takeover targets, the top quartile might be the ones that get taken out in any given cycle. It's just, they generally don't go farther down the track than that. And I'm always very careful because we all get a lot of pitches from people that have sort of moderate grade or lower grade or moderate cost or higher cost. And they're going, well, you know, if that thing was worth 300 million, you know, maybe we're worth 100 million. Whereas the truth of the matter is they're probably worth nothing because it's really only going to be the top quartile ones that go in any given cycle. That's just how it is. Like, I've never been a big fan of optionality for that reason, because optionality projects almost never actually get taken out. They do get bid higher by the market. Like if you're right in the, you know, zinc or copper or gold or whatever has this giant move in the 2 or 3 years after that, yes, your optionality play is probably going to get price. Because
but so
the market,
everything else in the market.
So will everything else, but it's not. Does that mean it's way more likely to get taken out? Probably not, because if it's a crap project, it's a crap project. I mean, you know, stuff that's that far down the list just doesn't get bought. So I think if you're able to stick to high quality projects that have a really strong economic argument, and you don't think the world's going to hell in a handbasket, which I'm not quite at that point yet, then I'm fine with owning those. And I mean, you know, you and I both follow a couple of things where the market isn't giving them much love, but do I still think that thing's going to get taken out? Yeah, probably.
Taken out, or worst case scenario, built and turned into something
I mean,
that
you know, the one we're both talking about is one where the capex isn't that big, so it's probably buildable. But you do see occasional examples like Ann Mason, which I don't think is a great copper deposit personally. I was never a big fan of it. But I was impressed that the major in question was willing to pay them like 150% of market cap.
Yeah.
I'll give them, you know, and that's something that can happen with a good project where the major is not going to be God's gift, but they're not going to be total jerks about it either. They're going to go, you know, let's pay something that's reasonable, so your shareholders will vote for it, and you know, it's still a great deal for us, but it's a good deal for shareholders. So I think there's still room to get that kind of jump in valuation if it's a good project. I mean, I really was surprised they got paid that much for it. But.
Yeah. Jay, how about you? So development assets, do you avoid them because of the boring stage of permitting? Do you like the potential for the takeout? How do you assess the opportunity there versus the high risk, high reward stuff that we all fall in love with?
So are we talking about base metals or?
I think anything. I think it could be gold or base metals. The development stage often gets short shrift.
Yeah, the development stage is that boring stage. You know, the excitement comes during the discovery, and that's where a lot of money is made. And then you go into the development stage, or I guess we're talking after development. There's still some upside in the development stage, but then engineering and financing and all permitting and all that stuff is just really where you waste your money a lot of times sitting with those things. It seems to me that, well, I have a number of development stories, and because I think a lot of the risk has been taken out by that time. And I think especially in this market, when everything is so depressed, I think there's a lot of upside with less risk in the development sector, and I like a lot of those.
Yeah, from my standpoint, it's been a mixed bag for me in the newsletter with development plays. Obviously, the time frame becomes the issue, right? And I've watched a couple of my deals, like I'll name them Canadian Zinc and Polymit, that I followed. We made money on them early on. They ran up, you know, on exploration success or, you know, getting love in the market. But they always pulled back, and then we went into this terrible, long, stretched out permitting time that ended up bad because the shareholder dilution just got, you know, out of whack, and then the great upside that you first started with is all depleted, right? And so it just takes all the air out of the story. So it really was a disappointment for me, and I had to get rid of them out of the newsletter, even though I think investors will make a little money on them. But at this point, we're not going to make anywhere near what we thought. So. Yeah, there's that moment that comes. I felt like I wrote my report in December of 2015 in the pit of despair when our market was just like, you know, how many ways are we just upside down here, you know? Eric and I were talking about that. And I felt like I had to, you know, because no one cared about expiration. You're writing a newsletter. What am I going to talk about? What is there to talk about in this space? And I had to go to the development production side of things, which luckily worked out for me because little did I know. I said, I have no idea when this market's going to turn at this point. We're all in the pit of despair. But if you're willing to hang out, these 10 stocks are going to be the best movers when the market turns.
Yeah.
Well, little did I know it was going to be next month. That following month, January, we wrote it for 8 months and then it was over, right? We took profits and we moved on, and that was the right call because as we see now, the last 2 years hasn't worked out for us. But development it's about grade, it's about polymetallic, it's about the right jurisdiction, and if you could get it, it's so hard to get the timing right. See, I thought I had the timing right on these other ones, and I was wrong. Yeah. Permitting can take way longer than what we used to look at for these things, and so, you know, we all love exploration for quick, make the money, get out, move on to the next one, right? Yeah. Development, not so. Yeah.
Another interesting angle on that, I think, is, I mean, the Australian market, miners have been getting much better returns down there than we have up here in North America. But also, the miners down there, the feedback that I've gotten from development stage companies is that miners down in Australia, when they're assessing a company, are much more interested in, you know, pin it down, show us a PEA, show us how it could make money, show us that it's going to work. So part of it, I guess, is also understanding who your market is, whether that's the investor side or whether that's potential buyers like the majors, and giving them what they need sort of at the right pace, which is always a balancing act, because are you supposed to continue exploring? Are you supposed to wrap a mine plan around it? Does that cap the upside? Do people think that that's all it is? Or, well, do they think you're distracted because you're chasing new targets? It's a constant balancing act for all of these companies to try and figure all of that out. Interesting your comment about the market turning and getting leverage to that. So when I talk about wrapping a mine plan around it and defining some numbers, yeah, the market does like numbers. If prices are going to move, that shows why the stock should be worth more. That moves us on to producers. If the big picture argument is correct, that generalist investors are going to show up and start buying metals, at least to some extent because they're undervalued, then producers are supposed to give us leverage. As newsletter writers, most of us don't focus on that, but does that ring true for you guys? Do you play that game alongside the exploration game that, you know, takes up more of your time? Does it interest you? Do you think that it's an important story to remind people about in terms of encouraging those generalists? You know, that topic area. Greg, I'll let you go first so they don't steal all your ideas.
No, production, again, I had to go to some production stories in 2015 just to survive. So I was grateful for those. They worked out. I got rid of them. Now the focus is on the exploration side again. Production is a different animal,
Very
right?
much
Let me
so.
give you an example here. You know, when Galore Creek happened, you know, the classic, okay, big discovery, the companies all come in bidding on it. It gets bid up to $18, $19, and the CEO, who I had lunch with about a year afterwards when it all fell apart, admitted to me, he says, Greg, I had no business doing that. It's ruined my career, basically. I'm an exploration guy, and I tried to move into production, and I didn't know what I was doing, and I got my head handed to me. And stock went back to 50 cents, Nova Gold. We all remember it, right? We made money on it on the way up, but it came crashing back down, and it's still sitting there, not in production, right? So production is a unique thing. It takes a unique skill set. I don't understand all those things.
No.
I've prided myself, and I've spent most of my time learning exploration and trying to figure that side of the market out. And production, like I said, is a different animal, but you can make money on it. And I think there's plenty of good producers that are going to be tax loss sold here in the next few weeks that could be very attractive buys.
Right, even for short-term buy and
Short
sell.
term, that one makes sense.
Yeah. Jay?
Yeah, what is the question?
I'm not clear on my questions.
I guess my attention span is...
in your letter and whatnot, you focus mostly on the exploration end of things, and maybe development to some extent. Do you also play producers? Do you like the production end of thing for leverage?
Yeah, certainly in tough markets, you have to look at what's going to play in the markets. And yeah, I have a mix of all categories all the time. So, but clearly, you know, we're in a position now as compared to post, you know, a couple of years back when you couldn't do anything with exploration. You couldn't, you know, there was no bids for these things. And so yeah, I went to the companies that could stay alive, and of course it's the dilution issue that comes into play that's really the killer all the time. So the companies that can, so I went to some cash flow producers that could stay alive and talked about those and focused on those for the most part. But yeah, I mean, probably 50% of my companies are exploration. Early, not too many early, it's not as early as Eric for the most part. I'd like to see some, it doesn't have to be a resource, but at least some good drill holes and some, you know, sizable structures that give you something to possibly get excited about in the future. But yeah, I switch back and forth depending on market conditions a lot, sure.
You know, and one thing I just want to mention what Jay was saying, I think this is a good segue to say thank you to all the subscribers who supported us in those down times when
for sure.
We didn't even know what to write. I remember just getting to the point where I had to write something, I didn't know what to write. I literally was like, oh my gosh. How many
We know who the 7 of you are.
So yes, thank you to all the patient and loyal subscribers who kept, you know, putting their credit cards through on a quarterly basis to keep us in business so we can get to this moment where we may be able to make a lot of money again.
I didn't know we were having such a heart-to-heart, but I love it. Eric, you never...
bring that out in us, Gwen.
I know, it's the softer side. Eric, you never talk about big companies.
Not really.
At all. Do
I
you invest in them? Do you...
Not a lot, actually. I mean, now that you mention it, I mean, I don't generally deal with large companies or large producers in the newsletter because, I mean, frankly, I don't think I can add any value to the conversation. There's so many house analysts covering all those companies. Like, what am I going to say that hasn't been said 50 times before?
Absolutely.
I mean, I was thinking about it, and I think you already know this because, you know, we follow some of the same stuff sometimes, is that I think I've got 2 or 3 producers on the list, and in all cases, there are companies that were on my list before. I just kind of hung on to them through the development cycle, which I don't do a lot of the time. But if I think it's a really good project where I really, you know, it looks to me like, yeah, this mine's going to be, this is going to be an awesome operation. It's going to make a lot of money. I mean, Nevsun's probably the primary example of that, where I started following it early in the development stage. And it was a crappy part of the market, and it wasn't easy for them to get it done. But the numbers were just, it was such an impressive deposit. Bisha was just, looked so amazing. It looked like something that would just be a real money maker.
And it was.
And the only other one, and I know you follow it, and I should probably start stealing your updates because I don't update them nearly often enough, is Rocks Gold. And it was the same thing where I followed it sort of from discovery. I knew the project because it was in the company that used to be called True Gold that got taken out. It was part of, it was Riverstone way back in the day, and that project was in that, and they optioned it to the Rocks Gold guys, and they did a great job of finding it. It's a beautiful high-grade underground gold deposit, and it's been a great performer. The company makes a lot of money. I keep waiting to see them do some M&A or something to kind of do the next stage,
leg it up.
Which they haven't done yet, but very occasionally I'll hang on to a company like that just because I just think the project is going to be a real winner and really make a lot of money. But I don't generally start following companies as producers. I do. That said, there's probably space for me to do that a little more. I mean, I am following a bunch of development stories, and maybe some of those I end up following all the way through. I mean, like Orezone, for example. Those guys I know that management group. I know them quite well. They absolutely have the capabilities to put that in production and excuse my French, not fuck it up, which most exploration groups unquestionably will do if they try to put it in production. I have no concerns whatsoever with those guys. They've done it a number of times before. They know what they're doing. And it's one of those groups that can credibly say to larger companies, look, we're just going to put this thing in production. Like, you know, you want to make a bid, whatever, knock yourself out. But if it's not the right number, we're just going to keep pushing this thing forward and put it in production. And everybody thinks of I know He's done a great job of branding it. People call it the Brent Cook curve, which it's not, by the way. It's the Pierre Lassonde curve is actually what it is, where they show the discovery, everybody goes crazy, get excited, they get bored, development, but all of us tend to forget there is actually another end of that curve where it goes up again, which it quite often does when you're in the super boring. The detail engineering's done. They've actually found the money. They've started building it, and it'll just be like, we'll see in 18 months to cut the ribbon.
Yeah.
There's actually a reasonable move a lot of the time in companies that right at the end of it that a lot of us.
Well, the Bruce Jack mine,
I know
right?
that is.
Yeah.
I don't know.
Yeah.
I don't know who's crying.
Like,
That's
and
weird.
you don't usually see companies get followed by people like us at that end of things. I mean, the house analysts do, but there is an opportunity there if you're willing to kind of go through these boring. They've got everything done. They're actually building it. And if you can separate the wheat from the chaff, like this is going to be like an average one, but this is going to be a great mine. There's actually room for gains there. I haven't spent a lot of time on it.
Well, it's more a timing issue. It's like trying to catch knives. You want to buy right before the production decision is announced.
You don't want to buy that crappy part of the curve where it's still
Well,
dropping.
the other falling knife part of it, though, is the ones that fail. And obviously, we don't know how good a deposit is until you're actually inside it. And that's after you've diluted the shares and taken on a bunch of debt and done all of this. Yeah. And that's the other big risk, right? Yeah. So there's another newsletter out there who dubs it the golden runway, right? Like the moving from the production decision through the build, getting into production. And yes, you should get a nice re-rating unless it doesn't work. So again, that's a difficult trap to avoid unless you're an engineer, right? So then, again, are there specific things that you guys look for to try and avoid that trap if you are following a company that's moving along there, or if you get interested in a company of that nature?
If I had to do over again, I'd go to school to become a mining engineer.
I know, right? Me
That's
too.
because I see these guys in the field and they have this understanding. They can look at things more critically and understand it in a way that nobody else does. This is going to work or is this not going to work? And the rest of us are like, what do you guys say? Because we don't know. and that's a knowledge, that group of people I'm very envious of for their knowledge. I wish I would have had someone guiding me towards that when I was much younger.
You're different from most geologists who look at engineers as the people who ruin their deposits.
Right. Well, the engineers are the reality guys.
I know. Nobody likes reality checks.
Well, the truth is, it's hard to spot those red flags a lot of the time. I mean,
it is.
Quite often you see a project go bad when it goes into production. It's had a myriad of, if it's a project where they've done like a $500 million finance package, I mean, trust me, those banks don't screw around when they do due diligence. It's not like nobody's ripped that thing apart.
Yeah.
And sometimes it's just something that, some stupid little thing that nobody caught.
Some rock competency issue that got, got missed or,
Yeah, like, I mean, a couple of recent examples, one of them down in Colombia, the issues seem to be rock mechanics.
Rock mechanics.
And I've certainly had people tell me that are familiar with the area saying like, to me it made no sense those guys are going to try to mine at that rate because the stuff's just not competent to be doing drives that big. But where do you find that stuff in advance? Like most of the time you don't. I mean, it's just a lot of times these things don't get spotted. I mean, everybody kind of had 20/20 hindsight when it came to like Rubicon, for instance.
Sure. And there are some, with Rubicon, we look back and there's at least one thing that stands out, which is that they went from PEA into a build. So they took an early geology and mine plan and sort of built on it. And turns out you can't skip the boring phase, because the boring phase adds a lot of information to the geologic model and to the engineering that's really important.
Yeah.
But certainly, and it seems sort of boring, it seems like we're just repeating ourselves, but when it comes to the building side of it, it's the people. And it's not just someone who's built a mine before. Have they built a mine of that type, of that scale, in that rock type, right? Like they really, and not just the CEO and president, but who's the guy delivering the project?
Yeah. I followed John Brownlee just because of his production prowess in that regard. I got involved with a long time ago in Mexico, Capital Gold. I remember going on this site visit. It was a desert, right? They had a gold discovery, and this guy named John Brownlee, who unfortunately is no longer with us, he had built big, huge operations, the biggest open pits in the world over in Russia and places like that. So for him to come and build this tiny little open pit in Mexico was like a cakewalk for him, right? It was so simple, and He got it up and running within 10 months. They broke ground, and 10 months later, they were producing, 30,000 ounces of gold. 6 months later, 80,000 ounces of gold a year.
Wow.
So to me, that's a guy like that is, he's those production guys that we just align ourselves with because they're so good at what they do.
So now, of course, I'm going to ask you what right now, the market is really excited about discoveries right now, but there's other stories that are gaining traction. So what right now is your favorite area in which to play? And you can choose commodity if you want, or you can choose stage. And of course, I have to ask you to name a company that you like, that's an example thereof, and ideally one that hasn't already made the move. Like, you can't all just say Great Bear because then, oh, look how smart I am, because that's already happened. Ideally one where the potential is still ahead.
We're only as good as our next good recommendation.
Our next good one, not the last one. What have you done for me lately?
I guess I'm sort of, I hadn't really thought about it. I kind of thought about it a bit before I did my talk yesterday, and sort of came to the conclusion that I was kind of following a barbell model without really, sort of a barbell model without really consciously doing it, where most of what's in the newsletter, most of what I'm following is either discovery type stories, or it's stories that are developers, where I think at the end of the day, when all the studies are said and done, it's going to turn out to be one of those projects that gets taken out. That just seems to be where most of them fall lately. I'm trying to think of ones that are, in terms of ones that are most of the way along, where I'm still very comfortable. I'm comfortable they're actually going to improve on the feasibility study. Actually, is Orezone. I still very much. That's one of those groups where I have no concerns about their ability to take that thing across the finish line. Like, no two ways about it. Those guys, they've done it numerous times before, very successfully. It's a great project. Patty's doing a bunch of stuff right now I think it's actually going to, I think people will be surprised how much they improve the NPV of that. But it's also not going to hold up the timeline. Like, it's going forward. They plan that thing to be in production 2020, whether it's them or somebody else cutting the ribbon, and I think they'll make it. Another one that's at that stage, I hope, we'll see I'm really not worried about it. We'll see a PEA within a week or two, and that's Vendetta. I am not worried about the PEA not being good. I mean, it's just, you can almost do the numbers back of the envelope on that one. I got some idea what it's going to look like. The numbers are going to be fine, and it's just too obvious. There are actually very, very few relatively low capex, high return base metal projects that are out there to be bought. There's just not many of them. They're pretty few and far between. And Pegmont's one of the few ones. I hope they can figure out, you made the comment about ASX listings or ASX companies, and I hope they can find some way to capture that, because you look at projects that are very similar to Pegmont in ASX companies, they get way better valuations. Yeah. On the other end of this, early end of the spectrum, one of them, I just think it's, like I make no bones about the fact that I got a real soft spot for people that are willing to go and try to find stuff nobody's found before. It's got a huge amount of stock out. The share structure sucks. They'd be the first ones to tell you this. But I would definitely look at Northern, at least look at and pay attention to Northern Shield, and that is just, it's so cool that these guys found an epithermal gold system. They're at the top of the system, which means they're not going to get a lot of, unless they really get lucky, they're not going to get a lot of high-graded surface, but it appears that it's got scale, and this is a very, very, very new story. I mean, the outcrop occurrences that they're starting to find, they started finding those like 5 days ago, like literally 5 days ago.
You heard it here first.
The prospector is out there today finding more, now that they've kind of got their eye in on it, and they know where to look to try to find exposures, because they just weren't expecting to find much.
Right.
Like exposure of any kind. They weren't, and it's weird that no prospector has gone out there and just gone, oh, quartz vein, put it in a bag, but it apparently hasn't happened. It's strange, but
all right.
But I just think that's it's just such a cool story. I really like seeing guys do that.
New stuff, yeah. Jay, area that you love to play in, and a stock?
Well, I don't know if there's any specific area, but I would say a company that Eric's responsible for getting me interested in, and he doesn't want to have anything to do with it, is Gold Source. It's a little company, and the reason I like it in large part is because Eric Fire is really involved in, he's an engineer in moving it forward. It's a saprolite project in Guyana, and they're really finding a lot of higher grade material now. What they tried to see if they could put it into production with just using gravity separation, and they were only getting 18% or something like that. So they have to put a cyanide circuit in there, and they will get in the high 90s or so. But I know Eric told me a couple of weeks ago that they're now, it's in the middle of the jungle, so there's no power. So they've decided that a large amount of the material doesn't need to be crushed at all. So that's a big positive in terms of the cost savings. The economics look really good. They had to expand and drill more now to justify the CapEx to put in the additional CapEx for the cyanide plant and all of that. But there's also a lot of fresh rock underneath that. It's very vast, very large, and it's my understanding that there's potentially a very serious, larger player coming into the picture, very likely, very possibly. But I think it's going to be a fairly modest producer, maybe upwards to 70, 80,000 ounces a year. Stock selling at 4 cents or 5 cents, something like that right now. But it's the people behind it. Did I see some people shrieking and saying?
No,
No,
it's
he
just
just
there,
said
just
6
say
cents. He's
No, it
looking
said
it up
6.
right now.
6 cents, yeah.
Oh, 6 cents. I beg your pardon.
You're up.
Yeah.
Yeah, I
I'm
know,
not
big
up because I
change.
bought it at 7. So. No, but that's one I think. Again, it's the players. Eric Fire at Silvercrest. Has done
Yeah.
a remarkable job.
I agree.
It's the people. Eric says he never wanted to cover it because he doesn't want to go to the jungles, and I don't blame him. I wouldn't go either. But if someone is willing to go and make money, and I think that's one of my favorites at this time.
Okay, there we go. That's one that's not the discovery or development.
No,
I mean,
it's
it's sort of in the middle of the
emerging
road.
producer,
Yeah. Right.
Just a funny story on that gold source. I followed Scott Drever and Eric through Silvercrest. We made money on it while I'm on the Santa Elena site visit. And as Scott Drever, the CEO, were driving back to the town to stay for the night at the hotel, he says, "Oh, Greg, I know you really like us, but I got another deal. It's called Gold Source. We're going to look for diamonds in Saskatchewan. I can get you some cheap paper. You want 10-cent paper?"
This was Gold Source.
And I love Scott, and I said, as much as I was thankful for the opportunity I passed, I said to Scott, I don't know anything about diamonds. I wouldn't be the guy to follow that, right? So literally 3 months later, they drill for diamonds and hit a 80-meter coal seam, and the stock goes to $20.
This is a company with gold in the name,
I
looking
should
for
have liked
diamonds that hit
diamonds.
coal.
Why did I say I should have liked diamonds?
know, right?
10-cent paper to
It was
$20
still
and
carbon.
three.
They still hit carbon.
Yeah.
Yeah.
It's
Anyway,
probably
that's how.
It's probably one of the best examples of. I mean, people talk about short squeezes. That's probably one of the best examples you'll ever see of a classic short squeeze, where I won't name names, but it was Canaccord. They decided to be smart on it, and they got really, really short, and there was no float on that stock.
Yeah.
And when they pulled another couple of holes that had thick coal intercepts, those guys were screwed.
Yeah.
And they just had to cover, and that's why the stock went to $20. It was just ridiculous.
Yeah.
And nothing ever happened with the coal discovery. If you
No, I mean, it's still there, but it's not.
Yeah.
It's
But I agree, those are good people.
But that's not Gold Source of the day.
Yeah, Jay's like, stop smearing my story.
Telling me if I got the wrong
No,
company.
no.
no,
it's
it's
a-
the same, it is actually the same company.
Yeah, it is.
It
It
was
is
an
same
earlier
company.
incarnation.
Earlier version of it, no, so. But from my standpoint, on the development side, one company that I still keep in my newsletter is Almaden, just for that purpose, because I do think that is an excellent team that knows what they're doing. They got all the right people behind them. So if you can buy it on the cheap during this downturn, I think you're going to get a good 3, 4, 5x when the market turns.
Yeah, I would actually, Almaden, I would agree. That's another stock where they're still promising to have a feasibility study by year end, and I think people are going to be very pleasantly surprised by the
It's
feasibility
increased,
study.
as from what we originally knew as the discovery. It's
Well,
much,
and
much
the other thing with that particular deal is they've done a bunch of work on optical sorting. They've done a bunch of, fair size, not bench scale, but fair size tests on site where they were running several tons through. The optical sorting does appear to work. And basically what optical sorting does is it goes through the crusher and it runs on this, it'll basically run on a conveyor belt, and you've basically got cameras focused on it. This only works if your ore and your waste are, one's light, one's dark, or vice versa. The cameras pick those up, and what you've got is a bunch of little jets under the conveyor that when it sees, okay, that's a waste one, the jet fires this air thing and blows it off the conveyor. So it's a way to basically get rid of a bunch of the rock before you have to put it through the mill. It allows you to mine at a higher rate with the same mill size and save you some money. And apparently, well, they put out a release on this 3 or 4 months ago. The optical sorting seems to actually work really well.
Okay.
And it is going to be part of the feasibility study.
Cool.
Like I think people are going to be surprised how good the feasibility study is on that project.
But that one seems like it's coming finally to a head. I remember Bob Bishop telling me, Greg, you need to follow Almaden. That was in 2004,
Yeah, no, it's been a
few
while.
things since then. I'll wrap it up on the exploration. I'm going to limit myself to companies that are here just out of it, just because they're here.
Yeah.
I think on the exploration end, exploration's always swing for the fences. There's there's lots of stories out there that look interesting. But there's zero promises, right? This is exploration. I'm pretty interested in Troubadour. I think that trench looks really interesting. The geophysics line up well. The soils look good. And the share structure is super tight. So even if it works even if it's an okay hit, like when you have only 21 million shares out, you should get a fairly good lift even without a phenomenal drill result. So I'm excited about the possibilities for Troubadour. And on the more advanced end of things, I think Tinka deserves another look. I think zinc has gotten really oversold, the price of the metal and also the equities. I think they have added to their resource in very significant ways over the year, and they've only gotten punished for it because of just big picture zinc stuff. And it's a great project, and I think a lot of majors are interested. So I think Tinka is one that's more on the more advanced end of things that I would highlight. And I think, team, that I'm just going to wrap it up there. We've had a busy 2 days. We are